Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer, so now let's talk silver. Folks, we have a huge, compact, and complex video to break down and dissect today. Unless you live under a rock, and even if you did, you probably heard about the Silicon Valley Bank failing. Now, we're going to incorporate what happened, what leading up to this happened, and also how that incorporates and ties into precious metals. Because this article is saying silver rallies on traders rushing to safety. Now, this all has to do with Federal Chairman Jerome Powell from the Federal Reserve doing X, Y, and Z, which caused a domino effect leading to this whole situation. So we're gonna go into this. I did want to mention before we jump into this very interesting video, I am doing a massive silver giveaway. Now the giveaway got updated. There's actually going to be 2 winners and the prizes are just as big. I'm giving away an entire tube of sealed eagles. Next Wednesday, Andy Scheckman and I are going to live stream the announcement winners, and he's also going to be giving away a tube of eagles. So 2 winners are going to both be winning a tube of eagles on a live stream with Andy Scheckman and I. So you don't want to miss it. Stay tuned. That means you got to click subscribe, click the bell so you don't miss the announcement video or future entry videos, as I will be doing several more videos moving forwards, or giveaway videos at least. So let's look at this. Silver advances more than 2%, set to finish the week almost flat. U.S. jobs data was mixed, but the unemployment rate rose, signaling the cooling labor market. Traders rushed into precious metals, uncertain about next week's U.S. inflation data, and punished the U.S. dollar. Now, this is interesting. This is interesting because this article does talk about what happened step by step. And it even says right here, this is the sequence of events that led to the failure. Federal Reserve raises rates, and that's kind of where we start right here. Some Silicon Valley Bank clients face cash crunch. Higher interest rates caused the market for initial public offerings to shut down for many startups and made private fundraising more costly. Some Silicon Valley Bank clients started pulling money out to meet their liquidity needs. This culminated in Silicon Valley Bank looking for ways this week to meet its customers' withdrawals. Then the bank sells bond portfolios at a loss. To fund the redemptions on Wednesday, Silicon Valley Bank sold a $21 billion bond portfolio consisting of mostly U.S. Treasuries. The portfolio was yielding at an average 1.79%, far below the current 10-year Treasury yield of about 3.9%. This forced the bank to recognize a $1.8 billion loss, which it needed to fill through a capital raise. So you could see how we always talk about this getting ourselves out of debt by replacing it with more debt, trying to pay off a credit card with another credit card. You know, we're not just on bank scales, but we're talking about on a much larger scale as well. And it's kind of funny because on the show that Andy Scheckman and I did, our last episode, highly recommend you go check out. One of the first things Andy talks about is we go into how times are so crazy right now. And Andy says, we're living in such crazy times that the everyday information that comes out on a day-to-day basis, each one of these situations itself would have been a bomb drop before. They would come out every couple of months, and that would have been the biggest news for months or weeks. But now, every single day, something like that is happening. And we're becoming desensitized to it, which is dangerous. And this is a point I made, is a lot of people get into precious metals from a safe haven perspective because they're seeing that they don't trust banks or governments, and they're seeing that things are starting to go sideways, economic uncertainty. But nowadays, people are letting it blow over. Like, oh, okay, this isn't that bad, or okay, what's next? And they're getting desensitized to something, which is very dangerous, because before this situation would happen and everyone would go to precious metals, but now it's almost like the impact isn't as great, and they're starting to be able to justify or rationalize, oh, this will fix itself, or whatever's going to recover. And it is scary. Now, this is the next part of this whole I guess sequence of events that led to the failure. The bank announces a stock sale. SVB announced on Thursday that it would sell $2.25 billion in common equity and preferred convertible stock to fill its funding hole. Its share ended trading on the way down to 60% as investors fretted that the deposit withdrawals might push it to raise even more capital. Then stock sale collapses. Some bank clients pulled their money from the bank on the advice of venture capital firms such as Peter Thiel's Founders Fund. Reuters reported this spooked investors such as General Atlantic that SVB had lined up for the stock sale, and the capital raising effort collapsed late on Thursday. Then the bank goes into receivership. Now the bank scrambled on Friday to find alternative funding, including through a sale of the company later in the day. However, Federal Deposit Insurance Corporation, the FDIC, of course, then announced that the bank was shut down in place under its receivership. The FDIC added it would seek to sell the bank's assets and that future dividend payments may be made to uninsured depositors. So the whole point of this is I hope this message can translate to people that maybe were pro fiat system, or the people that say you don't need to put your money into a safe haven or something that is protected beyond the dollar or a fiat-based system because banks can't fail or they won't, or people that say that are putting on their tinfoil hats or something's always going. Those people are living in la-la land. They're not realizing that things are getting much more severe, much faster. Yes, COVID was like, it sped things up a little bit, times 10, and that should make you even more prepared. That should make you even want to get prepared even more, because that shows that what would have happened inevitably in 10 years is probably going to happen in 2 or 3 years now. You get what I'm saying? Do you guys remember before COVID what was happening? It was Iran tensions, Saudi Arabian oil fields getting attacked, and the U.S.-China trade wars, right? Those three things were the 2 months leading up before COVID. Iran tensions, Saudi Arabian oil fields, then the U.S.-China trade wars were going on. That was the biggest news. I was covering all this stuff day to day, and then all of a sudden COVID hits. None of that mattered anymore. Then it was COVID. But do you see how fast all of that just got swept under the rug because the next thing happens? And now the U.S., the war between Ukraine and Russia is going on. All these things are happening so fast, and people are forgetting the severity of it, getting desensitized. If this was a couple of years ago, each one of those things alone would have been huge deals to break down and dissect and figure out what are we going to do following up? What's our game plan? This is a strategy. We're strategizing. Investors make strategic decisions based off information. We take the information, tweak the odds in our favor. Gamblers throw money at the wall, hope it sticks with the odds highly against them. So looking at everything happening, especially when you have proof that banks can fail, that it's not just a myth, right? This stuff is real, and once people realize it can happen, it will be too late, because people say, oh, it will never happen, or it won't happen to me. But then when you're proved wrong, you're screwed. So why not prepare? So now let's look at some of this that sparked all this. So silver prices rallied on the back of a mixed U.S. jobs report that witnessed more Americans than estimated added to the workforce. Even though that would result in a strong U.S. dollar, the unemployment rate edged up, taking pressure off the U.S. Federal Reserve. At the time of writing, silver's trading around $20.49 an ounce. And this was written on the 10th, if I'm not mistaken. Yeah, so I guess 1-2 days ago, depending on when I post this video for you. So then the Federal Reserve expected to hike gradually as unemployment rate upticks. Wall Street extended its losses due to a risk-off impulse. The U.S. Department of Labor revealed that non-farm payrolls in February rose by 311,000 jobs, more than the 225,000 expected. January's job numbers were lowered from 517,000 to 504,000. The jobless rate was 3.6% higher than the forecast of 3.4%, indicating a weaker labor market. See, wages rose by 4.6%, and attention turned to the U.S. inflation data next week. Then the speculation comes, right? That's where the attention turns. During the week, U.S. Federal Chairman Jerome Powell said that higher and potentially faster interest rate hikes could be needed at his appearance in the U.S. Congress. He added that the U.S. economy remains solid and that the Fed will be watching non-farm payrolls figures next week's February Consumer Price Index, or the CPI readings. So then market participants' reaction sees the Federal Reserve hiking 25 basis points at the upcoming March meeting. Based on U.S. jobs data, money market futures expect Powell will cut rates by the end of 2023. And then additionally, investors sent the greenback tumbling, as shown by the U.S. dollar index, dropping 0.87%. And that's how U.S. Treasury bond yields extended their losses. 10-year yield plunging 16 basis points at 3.741%. A tailwind for precious metals prices. Silver is up more than 2% after testing its year-to-date lows around $19.92. So you can see how all of that kind of ties in together and how directly correlated silver's price is to the dollar index. Now, if we step out and look at silver's price right now, now we are in the weekend, so obviously nothing's really happening at the moment, but on Monday, we'll kind of see where things pick back up. It's at $20.55 right now, and you could see, let's go to like the 1 week chart. So yeah, you can see we're in the weekend right here, but you could see, man, look at that. That was right during the bank situation, and you could see it shot up to $21.65, right? That's from all the panic. Isn't that crazy to see? But now what's going to happen? Because that was leading right into Friday. So what's going to happen on Monday when things pick back up? It'll be interesting. It has been a couple days for things to cool down and all the fear, and people might have settled down, got their nerves to settle down a little bit. So we'll see. Or the story could have gotten bigger and people are getting more worried. So then on Monday things get even worse. I mean, we will have to see. All I know is, if you're a true silver stacker, then don't even really pay attention to if the price goes up to 22 or down to 19. It really doesn't matter. You know, we're talking about stacking for 5, 10, 15, 20 years. So why in the world would the price, why in the world would you care about what the price does in the immediate to even medium term, unless you're planning on selling? And I hope you don't plan on selling, so it doesn't matter, unless you're just trying to get a discount, right? So if it goes down to $18, $19, cool, go grab a couple extra ounces, because then you get a small discount. But in the terms of someone being worried, like, oh man, like silver's down, what am I going to do? You're looking at it from the wrong perspective, because that means you're still pegging silver's value to $1, which $1 is, you're pegging it to a fiat-based system, which is inevitably and ever-ending or never-ending in this cycle of depreciation in value. It's lost 98% of its purchasing power. It's not going to go to 97%. It's going to go to 99%. 98% is a factual number. It's lost 98% of its purchasing power. It's like 44% in the last 20 years. Like, it's getting faster, worse. And what happens when it hits 100%? Every fiat-based system fails. That we know that. It lasts about a century. Every fiat-based system fails because it's designed to fail, just like the bank. We're trying to get ourselves out of debt by replacing it with more debt. That's like trying to pay off a credit card with another credit card. When one thing goes wrong, you're trying to cover your butt, and you're trying to just pull things out of everywhere, and all of a sudden everything comes falling down. You try to mask it and make it seem like everything's okay because you're relying on other people's money that you're taking out of, and then you owe those people money. And it's just, it's not a system that works. And if our money was backed by gold and silver, as it used to be, that system could work, because then we wouldn't be able to borrow money that we don't have. It would be a one-to-one. Just like back in the day, if I handed a store clerk a walking Liberty, I was giving him something of value because there's 50 cents of silver inside of that coin. But nowadays, if I hand a store clerk 2 quarters, there's no value inside 2 quarters. So I'm giving him something that's just a promise. I'm promising him, yes, this 2 quarters is worth something, but it's not. Especially when you're determining that worth off of a made up spectrum. The dollar's only as strong as people think it is. So if people start to think the dollar isn't strong, it literally isn't strong. See how dangerous that is? And then you could see how when Andy Schectman talks about the BRICS nations trying to cut the dollar off the system, it makes sense because we have our hands, or we as the United States have our hands dipped in everyone else's, in everyone else's stuff. And for what? Why is the U.S. dollar the world's reserve currency? What if they make it? Why? They're making a system where that won't be the case. And that's dangerous. And especially since this pandemic exposed how broke the United States really is, now everyone's opting out of the US dollar. And it makes sense to do so. I mean, it's a genius idea. Make a digital currency backed by physical commodities. That means it is backed by something of actual value, which means it won't lead to the same inevitable demise of a fiat based system. I mean, it makes sense. I mean, it's gonna suck for the USD, but I can't get mad at them. If I was in their position, I would do the same thing. So anyways, yeah, I would wrap this video up here. You can see why this video is pretty important. I would love to get your thoughts on this. What do you think about this whole situation? What do you think this is gonna do to silver prices? Let me know in the comment section. Make sure you go enter my giveaway if you want a chance to win some free silver. Actually, an entire tube of sealed eagles. You actually get 2 opportunities because Andy Schectman's also going to be throwing in an entire 2 sealed eagles as well. Shout out to him. If you want to buy some silver from Andy, send an email to info@milesfranklin.com. Let him know. Let him know Silver Slayer sent you. Andy would love to hear it. Great guy, great company, most respected in the game. I promise you will not regret buying from them. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.